Okay, so this is how business is reacting. Okay, they're saving nearly $2 trillion. Not only do you have all these people terrified and throwing their money in banks and all this stuff, you have these businesses that back in '06 had 1.35 million in the banks, and now they have 2 trillion. Okay, mainly because certainty is the essential pivot of any economy. Okay, did anybody know this debt thing was going to happen a year ago, 6 months ago, 7 months ago, the month before it happened? No. Does anybody know that now that they almost shut down you guys heard about the whole thing, they almost shut down the FAA because they couldn't come to a stupid agreement with the union and all? It's ridiculous. Like, nobody is getting anything done. Okay, Tom, if you don't know if taxes tomorrow is going to be $1,000 or $100, are you comfortable spending that much money if you don't know if you're going to have that extra $900 leeway? Wouldn't you rather them just say, all right, Tom, it's going to be $200, done deal? You might not like it as much as paying $100, well, at least it's done. You know what it's going to be. You know how much money to set aside, right? You don't have to hold all this money just in case. Same concept, guys. What's happening now is, if you have a business that has 100, 50, 500, in some of these corporations' cases, a few thousand, 100,000 employees, and you don't know what's going on, okay? If you own a chain of coffee shops, and let's say each coffee shop has 10 people, and you want to open another coffee shop, and you know it would do well, honestly, I don't know what the hell what's going to happen. I can't plan for it. Do you really want to take the risk to try to expand, to try to hire more people, even if you're pretty sure it's going to work out, when you could lose 5% of your money in a day, or the government might start screwing up and rates pop up or go down even further? Do you feel comfortable hiring all these people and doing all this stuff? You don't, because you'd rather just hold your money and make sure what you have now is set versus continue to expand. And that's exactly what's happening. You have all these companies that they want to expand, but things are too crazy. They don't know if they're going to have to pay $100, $200, or $1,000. They're fine with paying whatever, but until someone tells them on pen and on ink that this is what you're going to pay, they don't want to do anything because they don't want to risk what they already have. Right? So again, this is how everyone else is reacting. Whereas these businesses and these multi-billion-dollar people are actually saving, everyone now is taking the money out of their savings account. This is the average rate of how much people are saving. We used to save 6 to 8%. Now we're saving 0, and we're actually adding more debt. Okay. Again, you have businesses saving, wealthy individuals saving, regular middle and lower income families not saving anything and taking out more debt. Yeah. The complete opposite, right? Because they have all the money and they don't want to expand and they can't hire. And again, John, would you feel comfortable hiring 2 assistants if you don't know? Let's put it this way. Let's say there's a piece of legislation. However you want to look at it, the government's trying to figure out, do we tell banks to let go of these bunch of foreclosures? Or do we tell bank, no, hold these foreclosures for 2 or 3 more years? If you don't know which way they're going to go, do you still want to hire your 2 assistants? No, because you don't know. Whatever it's going to be, let me know so I can hurry up and act and adjust to it, but you don't know what they're going to do. Okay, so you have all these people. I remember back in the day, you used to have 5, 6, 7 assistants at one point in the whole corner of Security Pacific, and now how many assistants do you have? 4. So you have. Okay. Why? Because not only is business slowing down, but like Mark was talking about earlier, there's all these reasons why the foreclosures aren't coming. Now, I'm not trying to say, yeah, let all the foreclosures go through. I'm just giving you an example as to you have to know what's going to happen in order for you to adjust your business accordingly. Now, imagine this on a grand, bigger scale. Okay. Right.
On a personal level, because I'm a little unsure. I don't know what's going to be done, and maybe because I don't know how much time I have left.
Okay. Right. Exactly. Now I'm going to give you another example. Okay, of what's happening. John, is it fair, without me putting you on blast, is it fair to say you make over 6 figures? Sure. Okay. If John makes $100,000 and his mortgage is modestly $50,000 a year, and he spends $20,000 a year on food, traveling, whatever, and he has another $30,000 to save, invest, do whatever he wants. John, you had a great job where you took home $100,000 a year. Now, you lost the job. You can't find a $50,000 a year job. You can barely find a $30,000 a year job. Now, how does it work? Now what do you give up? You give up eating. You give up traveling, obviously. You probably give up all your other amenities. Yeah, you know. You know, what do you do? And that's what's happening. You had these people that were making, for quite a long time, as you saw, they were making $30,000, $40,000, $50,000 a year. Not in the Bay Area, but especially in like middle America, where the, you know, our $400,000 house is $50,000 to $100,000. Now they had a modest mortgage, they had modest bills, they did save a little bit. Maybe at one point, yeah, they kind of went spending crazy and stuff like that. Now their pay got cut in half, but their bills are still the same. What do they let go? I love this house. I love to eat. I love my family. I love the once a year vacation we take. Where do you cut back? And that's exactly what's going on. So yeah, people still with make the good jobs, they're saving. Perfect example, because you don't know what the hell's going on on a personal level. Again, you have all these people that they don't know what's going on. They can't compete with all these multi-million-dollar people, and they don't make any more money. Okay, so where are all these investors going? Okay, all these safe investments, gold, these treasury notes, they're only making 2%. Inflation's 2%. Okay, you have companies, for example, like the unions, that they're saying, we can't just make 2%. We have to support pensions. We have to grow at 5, 6, 7, 8%. We're only stuck with 2, and that's the same as inflation. We're basically breaking even. How do you expand? You have to make some money for some of these things. Okay. Well, debt and stock market they crashed, they surged, they recrashed, and no one knows what the hell they're doing because of Greece and the United States. Politicians have a fight every 30 minutes over something that's completely redundant. It's retarded. Okay. So again, these companies, they have to find a medium to grow. Yes, they would love to grow at 10, 15%, or even 30% like the good old days. A year ago, they were able to make 8, 10%. Now, things are so crazy, so wild. Losing 5, 10% of your value in one day and then getting it right back and then losing it again. They're done with it. They're just like, look, if we can make something like 5%, 6%, 7%, we still beat out inflation and we don't make as much as we did, but at least we'll hold on and make a little bit, and we'll make up for it later. Okay. So just kind of give you an idea of how much money is in the U.S. $3.4 trillion in fixed income markets. That's bonds, debts. Every time you write a mortgage payment, that's that end. Okay. On the equity market, basically the stocks, 1.6 trillion. So you have 2/3 of all the money in the United States, basically collecting income, and you have 1/3 of the money trying to make it investing in companies. Okay. Well, what's happening is, what is everybody doing with their houses and their commercials? They're foreclosing. They're not paying their bills. So everybody over here is getting screwed. They're not making any money collecting payments anymore because now you have all these people foreclosing. What's happening down here is that the stocks are going up and down every damn day, that they don't know what the hell they're doing. So finally what's happening is you're starting to get all these big companies, okay, multi-million, CalPERS, CalSTRS, these companies with billions on their balance sheet because they are paying the pensions for every single California union employee. They're like, look, guys, you know what? We're losing money here because people aren't paying, and over here we're losing money because the stock market, it's a giant mood ring now. What the hell are we going to do? We need to have some money here. We need to be diverse. So what they're doing is, just kind of give you guys an idea, this isn't an exact dollar amount, but let's say they come up here and they go, you know what? People aren't paying their mortgages. Let's just pull out 15% of this $3.4 trillion and go buy some property. 15%. That is $500 billion that is now entering the market to buy property. Okay. So again, going back to that retail property, before people were happy making 6%. Now people want 7.5%. Well, here's $500 billion that just doesn't want to lose and lose. They just want to make over 2. How much do you think they're okay with? They're okay with 4%, 5%, 3.5% sometimes. They just want to make that much extra more than they can normally make without really even doing anything. They just want to make a little bit more extra. So what they're doing is, remember, if the cap rates go up, prices fall. Now what's happening is the prices are going the complete opposite way. Okay, you have gateway cities like San Francisco. San Francisco has tons of different types of jobs. You have LA, Boston, New York, DC. You have these big, huge cities that every regular investor that they could buy a building in downtown San Francisco, they're out of the game. Why? Because your normal person is going to want 6%. Now you have these big companies with hundreds and hundreds of $1 million, all cash buyers. They're going, you take your 6%, I'll take 4%. I don't care. What's that doing to the values? Pushing them up. Okay. To give you guys an idea of how much people are being kicked out. 08, 09, 2010, and year to date this year. Everything in dark blue is private money. Us, we start our own little investment group, we go do our thing. Individuals, okay? Anything in orange and this little green is basically these big REITs that are public companies that you can buy their stock, or these big pension funds. South Korea pension funds, CalPERS, CalSTRS, these big unions from Florida, and these basically they need money need to make money for the unions. Just this year, last year they bought 12% of all property retail. This year they've bought over 50. They're so sick of the stock market. They're so sick of the debt market. They need to make any amount of money more than 2%. They're just buying up everything and pushing all the prices high. To give you guys an idea of how much they're buying overall, this is all property over $5 million. They're buying 2/3 of everything over $5 million. So if you, let's say you three got together, hey man, we have $10 million. Let's go make some money. I could buy a house and make 6%, but you know what? Let's go buy some commercial, make 7-8%. The stock market's crazy. And you go buy stuff and you're looking like, oh yeah, 7% here, 7% there, and you're getting outbid by these hundreds of millions of dollars that are going, we will buy it in 10 days, all cash. We'll even give you more money because we just want to buy a safe investment. Do you guys even have a chance in that market? No. Realistically, do these first-time home buyers have a chance on these properties that kind of need work? They might pass FHA that are $100,000 compared to these investors? No, not really. It's the same concept, but on a much grander scale. Okay. Again, right now, no one liked real estate. Now everybody's loving real estate, especially apartments and hotels, because those are the most foreclosed. So of course people are going to go towards the foreclosures. Okay. And what's happening now is, these cap rates, that these prices were so expensive. Remember, this goes down, value goes up. Prices get cheaper, prices get more expensive. Okay. You have cap rates, these values on some of these property types that are costing more now than they did before the recession. Okay, last meeting, I don't have the slide with me, but last meeting I showed an example about how this company bought a building in Times Square for, I think, 1/8, probably like 20-30% of what it got foreclosed for. They held it for 12 months and made 2.5 times their money. And you're talking billions of dollars. Times Square building, in New York. Okay. What's happening is these cap rates have always followed T-bills. Okay. Treasury notes will make 2%. Just think of the mortgage concept. If Treasury bills are 3%, your average homeowner is going to pay 5%, and it's always going to follow along. Commercial has been the same way. If your Treasury notes are 3%, your average really good piece of property, downtown area, they're going to want 6%. And what's happening is this is starting to get narrow and more and more narrow because everything else is just too damn risky. Okay, give you guys an idea of how much money is out there. These are the rates, and this is from September 16th. Okay, for a multifamily loan larger than $3 million, you can get a 5-year fixed rate for 3 1/3% with only 20% down. Ed, how much do you need down to buy a income property, a second home? 25%. What's the rate, Scott? Mark, what's the rate for a second home? Right now, 30 years are about 4.5. You get a $3 million apartment loan with less money down, percentage-wise, and almost a whole % cheaper. What do you think people are buying right now? They're buying wherever the money is cheapest. Okay, under $3 million, it's still only 3.5. Even commercial property, not even, guys, this isn't even like a second home buying a fourplex. Commercial properties, 4.25% with 25% down. But again, if you're an investor and you're looking at this is a whole % cheaper. And it's only 20% down versus 25% down. And if you guys are stuck between, should we get something that's $2.5 million or $4 million, knowing that you're going to get this much of a difference, a quarter point spread extra just by buying something bigger, what are you going to do? You're going to buy something bigger. That's what everybody's doing. Okay. So what else is hurting the market? Okay. Everybody remember the whole extend and pretend. This is how much, Mark touched on this earlier, this is how much shadow inventory is in the market. Everything in light blue is what is foreclosed right now that you could go find on the market. Everything in dark blue is delinquency, I believe after 9 months, no, I'm sorry, 120 days, so 4 months is all the dark blue. 5 times the amounts. Okay. To give you guys another idea of what's going on, same thing. The bottom blue, that's all the REO inventory right now. All the yellow is basically, they've already foreclosed, they're just waiting to throw it back on the market. And all the red is the amount of people that are seriously delinquent. And by seriously, they mean either 90 or 120 days past due. Okay, and this is all around the nation. So you can see, yeah, like Mark was mentioning earlier, 4 or 5 times the amount just sitting there waiting to come on the market. Okay, and foreclosures are slowing down for now. Okay, so they have slowed down basically because, like Mark mentioned earlier. Okay, so just to kind of give you guys an idea of, you know, of how do we help our economy. Okay, I took this quote from someone. While it's easy to bail out Greece or Ireland, who can bail out 1/4 of the world's economy? And I actually have a graph there that shows how much of the economy around the world we are compared to everywhere else. Okay, next behind us is Japan at, what is that, 8%? Everybody's worried about China. China is at 6%. We are the world economy. Okay, not to be like that big patriotic type person, but we are the economy, or 1/4 of it. Okay. This is a historical graph of how things have played over time from the 1500s all the way to today. The United States didn't even exist 500 years ago, and now you can see we have 22-ish, 25% of the world market. China was a huge producer 500 years ago. They got they shrank, and now they've came back to 12%, depending on which graph you look at. Western Europe, Latin America, Japan, India, so on and so forth. And you basically see the impact of what these global economies have had for the last 500 years. Okay. Okay. So again, just to kind of give you guys an idea of how bad it is. This is the Great Recession versus other recessions. So I already showed you the timeline of how many months people are employed under 27 months. All these little lines represent a recession. The brown one that extends from here all the way to the end, that's the 2001 dot-com bust. Okay, let me see. You have the 1980s one. That would be the yellow and purple one. So this would be the yellow one, and you have the purple one kind of following along right here. 1990, before Clinton came in, after Bush. Okay, this red one right here is the amount of percent we lost and the length. This is excluding, depending on whether or not you want to, census. And you can see we are not even anywhere close to what we used to be. Nowhere close. We haven't even started to come out of the red. Okay, and you can see it from the worst recession, which was the dot-com boom. No comparison. The top 2,000 layoffs of 05, just kind of give you guys or excuse me, top 5 layoffs of 2011 to give you guys an idea. Postal Service let go of 7,500 people. Army let go of 8,700 people. Borders, they filed bankruptcy. Over 10,000 people let go. American Coach is a company out of the East Coast. I'm sorry, I don't know exactly what they do. And then B of A recently announced they're going to lay off 30,000 people by the end of the year. Okay. Crazy thing is, have any of you guys kept up with what's going on with the post office and what they recently asked? They said they want to let go of 120,000 people because there's no need for the post office. These are all union workers making $30,000, $40,000, $50,000 a year. Another 120,000 people if they let them go. All because, this is my opinion, all because we don't want to pay more than 56 cents a stamp for the 5 stamps we send out a year or a month. You know, it's ridiculous. Okay? Doesn't mean if we all start paying more for stamps, this problem would go away, but I could, you know, I'm sure most people making more than minimum wage can afford to send out 4 stamps a month at $1 a piece or something like that. You know, it just doesn't make any sense. Okay. So, again, guys, not Democrat, not Republican. It's impossible to only cut our way out of this. This is what's been going on from the 80s all the way for the next 100 years to 2080. Okay? This dark line you see, that's revenues. Only one time in the history of this chart has our revenues ever exceeded our spending. Again, I don't care what party you are. That was in 1998, 1999. Okay? What's happening, though, is you have our regular other spending has been brought down. Social Security, health care, you can see being ballooned versus Social Security, and interest. So these are my 2 biggest concerns. The health care and the interest. So you have all these people in government, you know, the whole Republican side saying, you have to cut everything. Okay? The problem is the damage is already done. You could cut away everything and we still will be underwater. Okay, this right here is how much debt we would have, how much of a deficit the United States would have if we haven't done anything in the last 10 years. No economic recession, no war, no tax cuts for the rich, no none of that. We'd pretty much be broken even, give or take, for the next 20 years. Because of the economic recession, this is how much it's hurting us, how much it's putting us in the hole. Okay? Obviously, it could get less depending on how well it gets, but this kind of takes a more realistic view. Okay? TARP hurt us a little bit. That's about it. The fact is, we actually either broke even or made money off of TARP because these banks have been paying us interest. GM was paying us interest. I think the only one that hasn't fully paid us back now is either B of A or AIG or both, and they're about to. They're making money. Okay? You have all these recovery measures, the stimulus bills, whatever you want to call them. Right here is the wars in Afghanistan and Iraq, how much that's setting us back. What is that, about $1/3 of $1 trillion, right? A little small number. This is what's happening with the tax cuts. Okay? It starts off small, and then it just starts to grow bigger and bigger and bigger and bigger. And the reason why is because, as you guys saw, there's no more middle class, or it's disappearing. You're either poor or you're rich. So if you're rich and you get better tax breaks, better tax cuts than the people making $50,000 a year or less, this is what's happening, is that this interest just accumulates and accumulates and accumulates. It's like putting off a bad debt from your college and never paying it back. It's just going to get bigger and bigger and bigger and bigger. So if we were to cut no economic crash, no tax cuts, no wars, no TARP, no recovery measures, we would still finally be breaking even. We can't take any of it back, so we might as well deal with what we have. Okay? I don't have this in here, but just kind of give you guys an idea. This would be my own mini personal opinion. People are saying, oh, it's class warfare, it's income, it's not class warfare, guys. It's just flat out income inequality. Okay? If you make over $100,000 and you are not a W-2 employee, you are not paying 50% tax, or you're an idiot, or you have a really, really shitty accountant. I did not pay 50% tax on my income. Okay? It's very easy to write anything and everything off if you take the time to do it, or if you have a semi-decent accountant. Okay? I paid less taxes and made more than my cousin who made $100,000 and paid 45% income tax, married with 2 kids. To me, that just doesn't, it's simple math. It's not a matter of class warfare, class whatever. And again, I'm not a Democrat. It's just simple math, guys. Okay? Just kind of giving you guys an idea of what's happened since '79. Red line is how much income or raise in income the top 1% have had. Yellow is the highest fifth. Okay? And then here you have basically the bottom fifth and middle fifth. How much their income has grown over the last 30 years. Okay? You can call it what you want, but the top 1% of all earners have tripled the money they used to make. And remember, guys, this is compounded. It's not just a triple once. It's a triple, interest. The highest 5% have doubled their income. Okay? 80% of all Americans share only 7% of all the money in the world. Or excuse me, all the money in America, excuse me. The top 1% own 43% of the financial wealth. The next 4%, so if you guys want to count them together, that'd be the top 5% own, what's that, 70% or so? So the top 5 people out of a group of 100 in America own 75% of all the money that exists. Okay? And then you take the top 20% total, and they own, the top 20 people in the room, out of a room of 100, if everybody was divided equally, own 80% of everything that exists. And again, not for any party, but to me, when they get extra tax breaks, it just doesn't make logical sense to me. You can't cut your way out. You have to make some revenue, some way, somehow. Okay, but for some reason, people in government just they can't do addition. So, one area to me that must be reformed is the next biggest one, besides all the interest, which is healthcare. Okay, Medicaid's not that big a deal, but the whole thing is the medical care costs are skyrocketing. And to give you guys an idea of how much though, this is every major nation from 70s, the 80s, 90s, 2000, 2016. You have Australia, their estimated climb. You have France, their estimated climb in healthcare costs. The next one behind us is Norway. Look where we are. Our costs have skyrocketed almost to double what it costs any other country. Again, I'm not for anybody, not against anybody. The logic of it doesn't make sense. To me, again, personal opinion, I don't think if you're in the medical profession of insurance, and not insurance, but if you're in the medical profession, medicine and basic healthcare needs shouldn't be based on profit, just like war. You don't go to war to make money. It just doesn't make sense. Again, it's just something that just doesn't make sense to me. Okay. And it's not only just politicians, it's not only all these, big ruthless companies, it's us too. We want to have our cake and eat it. Okay? To give you guys some examples, and I'm sure most people are going to relate to this. You have people in the business world. They want you to cut business taxes, but they didn't want the federal aid so they could help expand. Okay? You have the unionized government people from states, governments, national, whatever. They want higher benefits, but the states are going broke. You have farmers. They want to continue receiving subsidies and protective tariffs when we might be saving money by getting, different rice, grains from everywhere else. Okay? You have motorists. This is the one that everybody can relate to. No one here wants higher gas prices. Even though, we can't add any more tax to it, but all our roads, our bridges and everything, all the taxes that was made to build those primarily was from the gas taxes. And no one here wants gas raised, but we all want our roads fixed. Okay. You have NAR. Okay. This one's kind of I'm not even going to lie, a little cheap shot at us. We want to retain the mortgage interest for people that have two homes. Cost the federal government almost $90 billion in 2008. Okay. Capital gains cost $150 billion. Okay. Here's the thing. Okay. At first when I read these things, I was kind of like, no, I kind of want this. Okay, some of this stuff makes sense, but a lot of us can relate to this. Okay, especially with the NAR stuff. Everyone wants their mortgage deduction. Okay, until you start really looking at the numbers. 82% of all the interest deductions went to the highest 20 percentile. Remember the 20% that owns 80% of the economy? 82% of all these deductions went to the 20 highest income earners. People that basically make over almost $170,000. And each person saved an average of $2,300. Only 0.06% went to the bottom 20% of income earners, and they saved an average of $2. And this cost our government $88 billion. So again, this is something that all of us can relate to because we're all in the real estate business. You start looking at that like, oh, the highest 20% of people saved $2,300 and it cost the government $88 billion when we're broke right now. Kind of makes you think about stuff like that. Okay. So, what to expect for the future? This is from Goldman Sachs. And you could say what you will, but Goldman Sachs, what can I say? Those guys know what the hell they're doing. Okay. They predicted the GDP, basically the growth rate, this year. They've been, this is what it was in 2010. This is about what it's going to be in 2011. They predict it's going to get a little better next year. Nothing major. Okay. They think that inflation is still going to be low, 2%, 1.6%. As long as gas and food prices don't make some crazy jump, this is pretty much what it's going to be, and I'll tend to agree with them on that. Unemployment rate, they think it's going to be about the same what it is, 9.4. They don't see it getting really any better. It's just a matter of everybody maintaining because no one knows what the hell is going on. Okay, and the 10-year note, okay, this is basically, again, this is what the 30-year mortgage follows. Right now, it's basically below this. It's about 2.6-ish, 2.5-ish, something like that. They predict it's going to go up by a little bit. So they're basically predicting that interest rates next year will be 4.5, 5-ish, still low. Okay. So what should we take away from everything? Number one, the priority of everyone here and the government, in whatever way you want to look at it, is stability. The businesses won't invest and hire new mid-level employees until they know what the government is going to do. The mid-level employees is the group that we most need to bounce back. And again, go back to John's example. If John knew that there was going to be a huge foreclosure wave in the next 6 months to a year, he would hire as many people as he can to train them now to get it ready. If John doesn't know when these foreclosures are going to hit, he's not going to have the staff to do it. Okay. Don't live above your means or even at it. Live below your means and invest the rest. I just wouldn't do the stock market. When it comes to investing in larger stabilized properties, if you can't beat them, join them. Whoever said syndications aren't for the regular Joe. There's syndications all over. It's not very hard to find, I promise, to basically find where you can basically say, hey, I have 50 grand, 100 grand. You guys are buying these big buildings that make 5, 6, 7%, all cash. I want in. Obviously, it's not all your money. You're just putting in a portion. Okay. As mentioned in May 2011, again, this is all my opinion, rates are going to stay under 5% until inflation starts to rise above 4 to 5%. Market stability is a wild card for rates. Wild markets equal low rates. Okay, could also have an effect on gas if Syria was to go to war with Iran or something like that, because obviously they run the oil control. That's going to push the oil prices up, which is going to affect inflation. But in general, as long as you read stuff that says core inflation is below 3-4%, rates are pretty much going to stay where they are. Okay. Oil is the wild card. Excuse me, wild card. It can grow or shrink depending on world economics, strength of our dollar, and of course the Middle East unrest, either by war or revolt. Okay. Regardless of what it is, there needs to be a clear plan on what the government is going to enact. Markets are going to react good or bad short term, regardless, because again, it's a mood ring. Okay? But the long term is the key. Don't expect this until after 2012 elections, at least, in my opinion. Okay? Us, okay, not just the government, but us, have to be willing to make sacrifices that are outside our comfort zone. Otherwise, we all lose. Okay? And that's it. Looks good in the suit, huh? No. Well, thanks, guys. Any questions for Mark and I? Any questions for Mark and I?
Any questions?
No. Everyone. I think I just made everybody depressed.
No, it's very informative. Very good. Very well.